Morning, Steve in Chicago. We have a new month. Overnight prices are a little easier. It's not out of the question to look for some profit taking after the big gains that we've seen in the grains over the last week or two. Nothing's really changed. Argentina weather is still dry over the next 10 days. We also see dryness across the western part of the hard-to-weather wheat belt, which has helped push wheat prices above where most people thought we would go at this time of the year. It's still kind of dry in the western Midwest. We're getting some rains again in the Ohio Valley and here in Chicago today, which at least helps my farm in central Illinois. And we'll kind of be looking for March weather and see what kind of unfolds as far as breaking some of these patterns. If we don't, we probably could put a little more premium in the bean and meal market and maybe even the wheat market. Corn's a reluctant follower, even though we are at prices in D's corn that farmers didn't expect to see a month ago. Could see a little bit more strength if April, like our weather guy thinks, is going to be wetter than normal. It could reduce some of the corn planted acres and could reduce some of the yield potential down the road. Then our guy thinks we actually could see a little warmer and drier trend in the western Midwest this summer. So this rally may not be over yet, but we need to pause and kind of reflect on the impact Argentina weather is going to have on our meal demand and the impact that dry weather in the southern plains is going to have on the final U.S. wheat crop. We're still the cheapest corn supplier in the world right now, but prices have moved up, and so here in the United States, so it's more competitive now, maybe to Brazil and also to the East Black Sea. We're watching pretty closely some rains in central Brazil and see if that delays plantings down there of the second corn crop. And on the March 8th report, we'll see if the USDA wants to lower South American corn crop and raise our demand and see if that helps the corn support the corn market. As far as wheat is concerned, we still don't see any real problems in the Black Sea weather-wise, but there is some logistic issues. We have priced ourselves out as far as soft wheat market is concerned and the hard wheat market. So we're not in the export market in wheat anymore, and Europe will probably take up the slack. So when we look at the export sales today, we're going to be watching to see if bean and especially meal trade is good, if corn trade is good, and if wheat trade continues to be slow. Open interest yesterday went up. Funds now are long 132,000 beans. They're long 60,000 corn, and they whittled their short and wheat position down to 38,000. So the other factor besides weather and the USDA March report will be, what do the funds do now? Do they add to those positions? Do they take some of those positions off? When we look at the outside markets, the crude, the Dow, and the copper charts look toppy, and so I don't think the market likes when we have a new Fed chairman talking hawkish. So we'll see if there's going to be any sell-off in those markets because of that, and if that impacts the grains. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.